Welcome to Leaders of Tomorrow Season 9. I have a very special guest with me who has been a dreamer and achiever, who started in a corporate job but followed his own dreams and made it big. I have with us Chairman of Edelweiss, Mr. Rasesh Shah. Rasesh, thank you so much for joining us. It's a pleasure having you on Leaders of Tomorrow Season 9. Our theme itself is empowering billion dreams. And that's why I think you are a very important speaker for us because you are somebody who has actually managed to leave behind a very safe, secure corporate job, started on your own, followed your dreams, and really made it big. So I think you will be an inspiration for our viewers. So thank you once again for joining us.
Thank you, Mir. Very excited to be here.
Absolutely. So, Rasesh, let me start with the big question on everybody's mind because this year has been unusual, obviously, and I mean we are probably not totally out of woods, but at least things look slightly better than what they were looking at probably 3 4 months back. Can we comfortably say now that the worst is behind us from economy point of view, from financial sector point of view?
Absolutely. I think it's very hard now to remember how things were in April, May, June, July. I think those 4.5 months, there was a lot of panic. There was a lot of fear, not just about COVID itself, but about the economy also. I think fortunately post August, partly the way things have improved, partly actions by government and Reserve Bank of India, but last 3 4 months there has been consecutively an improvement in sentiment. The panic has gone away. We still have a lot of issues to grapple with. There has been economic devastation that has happened. A lot of industries like hospitality and airlines and all still have to recover. But overall, I think the panic time is over. Now it's still a challenge of how to get back to normalcy as fast as we can. And we do think that I think another 3 to 6 months, it might take 3 to 6 months, things should come back to normalcy. But I think this was as extreme a test of the economy that I've seen in my last 25 years. And I've seen quite a bit. We started Edelweiss 25 years ago. And since then, we have seen, the Pokhran blast and the tech bubble and 9/11 and the global financial crisis and the taper tantrum and all. But I would say this COVID related crisis was as deep as any other crisis has been. And fortunately, there is a sense of relief that we have at least managed to put the crisis behind us and now slowly and steadily go back to normalcy.
Right. Now, if we can, divide the sectors, one is obviously the troubled sector, like you rightly mentioned, probably hospitality or basically any sector which involves probably face-to-face interaction or touch points. They are obviously going to take some time. The second sector or the second bunch of companies which really suffered during the initial shock were basically small and medium enterprises. Government did a lot of things, they have and they are doing a lot of things. There are a lot of reliefs which are extended, but what is your take on them? Because obviously many of them would have been by now thrown out of business, many would have survived and probably will be in a position to now kind of claw back or thrive. What is your take on that?
Actually, it is true. I think in the last 4 5 years, the SME sector has
Hmm.
had the most amount of changes. We all feel things have changed a lot. IBC, GST, demonetization, COVID, all of that. But I think the one sector that has seen a lot of change has been SME. And partly because there is a trend from informal to formal. The formalization of the economy is putting a lot of impetus for change onto the SME. And if you look at SME, there are three segments in SME. One is a formal SME, other is the informal SME, but the third one, which is more important, is the semi-formal SME. And
Hmm.
like our own NBFC, we do a lot of work in SME, but we work with the semi-formal. The semi-formal SMEs have been the most impacted. The informal SMEs got impacted more when demonetization happened because they deal more in cash and all. But I think the informal SME has started coming back because the rural spending has been good. Overall has been okay. And that's why you're seeing gold loan companies and all which deal with that sector have been doing well. The formal SME is also doing well as the banks have rolled out the MSME scheme. The government of India announced a 3 lakh crore Atmanirbhar credit scheme, emergency credit scheme. That has also done well. Almost 80% has been disbursed out of that. The semi-formal SMEs, which have, which have half their business in the informal sector, half informal sector, they are caught
Mhm.
in between this, GST input credit, and because they are neither informal nor formal, and almost half of SME sector is in that category because of the last 5 years we've been formalizing a lot of informal SMEs into formal. They are still not become formal. They are what we call this semi-formal ones. And this sector needs a lot of help. Even the current things done by the government and RBI are not enough for them.
Okay. Any specific measures that you have in mind? Because, on the face of it, it appears that both RBI and government, they have done a lot of things. They've been cognizant of the fact that this sector will need hand-holding. But if you say that it is not enough, is there anything specific that you have in mind?
The
Hmm.
semi-formal ones need four, five things. They one need access to restart capital because that is very, and this are, small shopkeepers and restaurants and small travel agencies and all, a lot of them will need capital, not just credit, but capital to restart. And maybe, government can through a SIDBI or somebody do an equity infusion scheme for a lot of these smaller, the amounts are small. They need 5 lakh, 10 lakh rupees of equity capital. But I
Hmm.
think, as you know, I think the equity markets, they work in crores, but they don't work in lakhs. So I think
Yeah.
they need equity capital. They need access to capital, but on a slightly longer term basis with some interest, moratorium or back-ended kind of stuff. And that is also government can do a special scheme for the semi-formal ones. Third one, they need some GST relief on compliance and input tax credit and all, because as I said, a lot of them are caught in between the formal sector and the informal sector. So there are a lot of specific measures. We deal with the government and we have put this out, but there are a lot of things you can do for the semi-formal one, and we deal with this because a lot of NBFCs deal with the semi-formal sector. Will also help ultimately provide the funding to the informal SME, to the semi-formal SMEs.
Absolutely. But structurally, if we look at the overall SME MSME ecosystem, and the kind of NPA numbers that we saw around in the range of 12.5 to 13 odd percent, you think banks will be able to cap it at these levels, or we may see some sort of breaching
Again,
the
you should remember a lot of this NPAs, these high numbers are not MSME NPAs, they are total
Hmm,
NPAs. And
hmm.
ironically, last 10 years in India, a lot of NPAs are created by the corporate account, large
All right,
accounts.
that's true.
Especially projects. And partly because I know infrastructure project or a large steel power project or housing projects, a lot of them have got stuck. What a project should get done in 4 5 years started getting 10 12 years. See what happened to me is when you do a project appraisal, and I started my career in ICICI, so we
Right.
understand project appraisal. Earlier days, we used to do a project appraisal, and if it's a 4 year implementation phase, we would say, okay, four, we go to five. You build in some cost and time overruns, but it was about 20%,
Hmm.
25%. What has happened last 10 years from 2011-12 to now, a lot of projects have got 100% cost overrun, 100% time overrun. And given that, I think it has added to a lot of risk and NPAs. So I don't blame the banks only or the corporate sector for that. But a large part of the NPAs happened in the project financing and the corporate sector, for which everybody paid a price. The economy paid a huge price for that because things have slowed down because of that. But I do think the banks have absorbed that. They've provided through IBC and NCLT, a lot of those have got resolved.
Absolutely. No, you're right, because I was speaking to some of the bankers, and they also mentioned that actually as SMEs have been quite disciplined in paying back. They've prioritized actually paying back rather than creating those additional NPAs. I mean, just a thought. What is your take on this RBI recommendation of, allowing large NBFCs and family-owned businesses to enter into the banking arena? What's your take on that?
I think first and foremost, I think we need to expand banking. India needs at least 100 more banks. because as we see, credit penetration is low. And bank is not just opening branches and all. Banks is also bringing in equity capital, because banking is a very capital intensive business. So I think that move of RBI is a good move. Of course, allowing corporates into banking will require, as RBI has also said, a lot of more safeguards and all, because you have to make sure that the banking assets and the industrial assets are not commingled, or there is no indirect connectivity between the two. But I think there are a lot of just professional NBFCs and professional financial services companies who are not part of a business house, who may also want to become a bank. But again, we have to remember, banking is when you have a lot of capital, you need a lot of capital to be able to be in banking. But I think overall, it's a good thing to evaluate. And what RBI has done is, the working group has put it out there to get feedback. There are pros and cons of that. I mean, there are always pros and cons of everything. But I think on the whole, if you look at a lot of the large business houses, they already are in insurance, they already are in mutual funds, they already are in NBFC. So anyway, they are part of the financial ecosystem. So I think this crisis, what we had in the last 2, 3 years, is a good point to really work towards, with a sense of urgency, to revamping the credit markets in India, because the impact of equity markets is only so much, but the impact of credit markets is so much more, because credit affects everybody else. So I do think the government and RBI are doing the right thing, taking they're allowing the crisis not to go to waste. And the last 2 years crisis has taught us that we need to really refigure the credit market structure in India.
Now, coming back to I won't call them struggling entrepreneurs, but somebody who's still trying to migrate from SME or MSME bracket to the larger corporates or
I would say
entrepreneurs.
all entrepreneurs struggle. So I think whether you are
Yeah,
small or large, I think part of entrepreneurship is about struggling, and
correct.
struggling to grow, struggling to get resources, struggling to find clients. So you're always struggling, and in a way, struggle is a good thing. That is what makes entrepreneurs.
Absolutely. No, that's very well said. My question was, now there are two things. One is the tectonic shift that we have seen in last 6 to 8 months, that the companies or the promoters who are willing to adopt technology and who could quickly probably migrate their operations even partially to the digital ecosystem, I think it worked for them. Second is, currently we are in a scenario where, like you also mentioned, that the interest rates have come down. There is a conducive environment for somebody who has a solid plan to go ahead and borrow. Now, what would be your advice to such small entrepreneurs or the SME, MSME category entrepreneurs? What should they do right now?
So I think first of all, as you correctly said, I think the more you can formalize your business
Hmm,
and make it more scalable. And as you correctly said, technology is one big vector of scalability, because I think earlier it felt that only if you are a large company you can use technology. Now everybody can use technology. A small 10, 15 people outfit, an SME outfit, can also use technology to gain advantage in terms of client experience, or in terms of cost efficiency and all. So I think very rightly you said technology is a good one. I think borrowing is available, but I always tell entrepreneurs, be prudent about borrowing. Make sure you have enough cash flow, you have enough capitalization, because I think over borrowing is always not good for entrepreneurs. So I think raising a lot of equity, and part of the entrepreneur job is to make sure there is enough equity, because every equity is ultimately the risk capital available in a business. So all entrepreneurs, small or large, should have a focus area on making sure they're adequately capitalized, they have enough equity for the uncertainty, for the rainy day. The fourth I would say is, so don't borrow too much, raise equity. If you have to err on the side of too much capital, have too much equity capital, don't have too much debt on your books.
hmm,
Be very careful on that. And the two other things I would say is, there is a lot of uncertainty. So always have a plan B. All entrepreneurs have to work with plan B. So when you are trying to scale a business or make investments, you are taking risk. but having a plan B takes part of the risk away.
I want to talk about the PLI scheme because while it focuses on manufacturing and there are sectors which are identified around 10 or so, there could be an opportunity here if it is implemented correctly. So one is the implementation part, and second is the scheme itself. Structurally, if we look at the PLI scheme, what is your view on that?
I think the PLI scheme is a good incentive. I think eventually it will be a short-term incentive because you can't have this kind of support forever for production and
Hmm.
manufacturing industry in India. But it is the need of the hour. If you look at India's manufacturing is now between 17 to 18% of the GDP. And no
Yeah.
country can grow unless your manufacturing is about 25% of GDP. That has been India's target for many, many years. I remember when I started my career, it was a target that manufacturing should be 25% of
Yeah.
GDP. We are still fairly far away, and we have constantly last 10 years been between 17, 18, 16, 17, 18. I think 25 will be hard to do in the short term, but even if we can get to 20, that will be a good number. That if 20% of our GDP becomes manufacturing, because a lot of the excess workers from the farm sector can get absorbed in manufacturing. They can't get absorbed in services as easily, but manufacturing can absorb it. I think the two areas where a lot of the excess farm labor can get absorbed will be manufacturing and housing.
Rasesh, I mean, your journey itself is quite interesting. But like I mentioned, this year was unusual in a lot of ways. In February or March, nobody imagined the world to get into a lockdown and all the supply chains actually literally go dry. Two, three biggest learnings for you during this entire obviously lockdown and then the unlocking phase that we are in right now.
Yeah, I think it has been. I mean, started my career 30 years ago. We started Edelweiss 25 years ago, and I would have never imagined a phase like this. Even in February, when we heard that some part of China has been completely locked down, and I used to think, how can it be? How can people not go out of their house? And I think we are almost 8, 9 months into that now, and I think one is we have all learned, and I've learned that we are all very adaptable. And I think that
Hmm.
adaptability that we have has got reinforced. And that has been a big, big, big eye opener again, that we can all adapt to a lot of things. The other has been, I think, a realization that we need so few things. So we have taken so much for granted in terms of what we wanted, while the essentials are very few. And I think those are also things we have learned in this phase. The third one has been, I think you have to be prepared. And I think like we started work from home in March itself, around first week of March, and it was very hard to, ordering computers and laptops. We had to order a lot of laptops. They went out of stock, all of that. So I think being prepared. So fortunately, our team started preparing around early March itself on that, and we had a 10 to 15 day. So as I was saying earlier, planning and preparing. Even I thought in the early days that these guys are over planning it. I think they are overthinking this too much. It's not going to get to this stage that we'll have to do trading and all from home because we have brokerage business, we execute client
Yeah.
trades. But around the middle of March, we had also moved terminals and trading. And even today, we are trading 100% of home, and we have done more volumes in the last 4, 5 months than we have done ever in the office. So even working from home, and we deal with institutional clients all over the world. We are, one of the
Yeah.
large institutional brokers, and we've been able to do that. So I think that planning and preparation helps a lot. So I think what we take for granted called business continuity planning and all of that, and data recovery and all those exercises are good to do. So I strongly recommend that all of us continue to do this kind of business continuity planning and all those exercises to make sure we have the backup servers and all of that, so that we can continue to be prepared for no matter what happens. And I think that was another learning in this. And lastly, I think businesses, the real quality of business is seen at this time. Even the real quality of people and the character comes out. And I think on that count also, it's been a very gratifying period because the way our clients, our customers, our employees have come together at this time. I would have not been prepared for this kind of a eventuality without a lot of chaos. But I think everything fell in place, and that was also good learning. That having your goodwill with your clients and stakeholders is also very important.
Absolutely. I can't let you go without asking about markets. And we have seen the kind of dream run that markets have put up. Now, obviously, one is they always move ahead of time and they factor in the future possibilities and growth. So, I mean, that happens. Partially, it's also liquidity driven. But currently, are you comfortable from valuation point of view and from growth point of view or earnings, I would say, to simplify it? From that lens, are you comfortable with the current scenario in the markets?
So I must start with a caveat. I've never been a market expert all my life. I mean,
Yeah,
because we have a brokerage business and we do a lot of research and all, people assume that we all are experts on the market. So I don't look at the market on a short-term basis. As I said, I
yeah,
look at a lot of the long-term macro parameters and all that. I think part of this, obviously, liquidity drives markets and all that is always required. I think ultimately it's going to be liquidity, sentiment, and earnings. Sentiment affects in the short term, liquidity affects in the medium term, and earnings affects markets in the long term. I think sentiment is very positive. Partly, as I said, the panic has gone away. COVID, the fear of COVID has gone away. We have learned to live with COVID. Liquidity is very ample all over the world and in India. Third is earnings have to come back. I think Q2 was not bad in that sense, and I do think that India, we have had last almost 7 years corporate earnings have not grown very well in India.
hmm,
So we have almost had a 7 year compression of earnings, and for various reasons. I think that cycle is over, and the earnings expansion cycle is starting. Even that is more a hypothesis, but I think if there are good benign liquidity conditions, the sentiment remains positive, and if the earnings are there, then all three engines for a good market are in place. Otherwise, usually we see that if 2 out of 3 markets work up to a point and don't work, if it's only 1 out of 3, then markets work for very short time. But all three, and it's actually very rare that you get liquidity, sentiment, and earnings all going in the same direction. I think currently liquidity and sentiment are there. Earnings have to improve, but I think the kind of degrowth and compression in earnings we have seen, this is a good base from which we should expect at least the next 3 to 5 years of earnings growth coming back in India.
right. One last question. Any major expectation or any major, because this is probably the right time for government also to push through reforms, any major expectation from the budget?
So I think the market, and I think all of you are also very instrumental because you shape the market opinion and expectations. I think the lower the expectations you keep from the budget, the better it
Hmm,
is, because the more happy you will be. So I think market should not build in a lot of expectation. Government will have its own challenges. And it is correctly the government should not be just market focused. Market is a
yeah,
barometer of the sentiment of the economy, but government has to allocate its resources on a lot of other things. Ideally, I don't think there should be anything bad for the market, but I don't think we should expect a lot of positive stuff only for the market. I think the government, whatever resources they have, they need to work on a fiscal stimulus, put money in the hands of the common man, maybe revive the SMEs and the MSMEs and create and allocate resources for that. So I would say the market should be more like an output variable for the government rather than an input variable. And the market participants should also keep their expectations low.
absolutely. Sir, thank you so much for joining us. It's been a pleasure having you on Leaders of Tomorrow.
Absolutely, Mihir. Thank you. Thank you very much.